Police Scarlight Bitcoin ETFs just lost $6.4 billion in 30 days. That's not a typo. The same ETFs Wall Street promised would save crypto are bleeding faster than FTX did. And here's what nobody's telling you about what comes next. Right now, we're watching the biggest test Bitcoin has ever faced from traditional finance. These aren't random retail investors panic selling. We're talking about BlackRock, Fidelity, and Grayscale, the giants who spent years convincing regulators that Bitcoin belonged in retirement accounts. And in just 1 month, investors pulled more money out of Bitcoin ETFs than the entire market cap of Cardano. Let me break down why this matters way more than the headlines suggest. When Bitcoin ETFs launched in January 2024, everyone celebrated. Finally, your grandma could buy Bitcoin in her brokerage account without touching a crypto wallet. Wall Street called it legitimacy. Crypto Twitter called it adoption. I called it the moment Bitcoin stopped being just our asset. Here's what actually happened. Those ETFs attracted 2 types of money. Real Bitcoin believers who wanted easy exposure, and traders who saw a hot new product to flip. Guess which group is leaving right now? The flippers. The tourists. The people who bought because CNBC told them to, not because they understood the technology. 6.4 billion in outflows sounds catastrophic until you zoom out. Bitcoin's market cap is still over $1 trillion. These ETFs hold about 30 billion combined. So we're talking about a 20% drawdown in institutional products, while Bitcoin itself only dropped 15%. That's not a death spiral. That's a shakeout. But here's where it gets interesting for beginners. This crypto winter chill everyone's freaking out about, it's happening at the exact same time banks are quietly preparing for the biggest payment system upgrade in 50 years. I'm talking about ISO 20022, the new global standard for financial messaging that several cryptocurrencies are built to integrate with. While Bitcoin ETFs bleed, tokens like XRP, XLM, and Algorand are positioning themselves as the bridge between old banking rails and new digital infrastructure. Banks don't care about price charts. They care about settlement speed, compliance, and interoperability. And ISO 20022 tokens are designed specifically for that institutional use case. Here's the pattern you need to understand. Every crypto winter separates speculative money from strategic money. The ETF outflows, that's Wall Street tourists heading for the exit. But the banks building ISO 20022 infrastructure, they're not going anywhere. They're hiring more blockchain engineers right now than they did in 2021. So what should you actually watch for in the coming weeks? 3 things. First, Bitcoin dominance. If Bitcoin's market share keeps climbing while altcoins bleed harder, that's capitulation territory, usually a bottom signal. Second, institutional buying patterns. Are the same firms bleeding ETF money quietly accumulating on-chain? The smart money doesn't announce its moves on CNBC. Third, and this is crucial, watch traditional banks announcing partnerships with ISO 20022 networks. When JP Morgan or Bank of America quietly integrates XRP or Stellar for cross-border settlements, that's not a press release event. That's a fundamental shift in how money moves globally. And it happens during winters, not bull runs. If you're thinking about positioning yourself in some of these tokens while prices are down, BitUnix has some solid options with the link in the description. Just keep your risk management tight in this environment. Here's your action plan. Don't panic over ETF outflows. Institutional products are always more volatile than the underlying asset. Instead, use this time to educate yourself on which projects are building real infrastructure versus which ones are just riding hype cycles. The difference becomes crystal clear when the tourists leave. Bitcoin has survived 3-year bear markets, exchange collapses, and countrywide bans. A $6 billion ETF outflow in a 30-day window, that's a footnote in the history books. The question isn't whether crypto survives this winter. The question is whether you're positioned for the thaw. This is educational content only, not financial advice. Always do your own research before investing. Markets are brutal to people who chase headlines instead of understanding fundamentals. Follow Stack Daily 60 for daily crypto and money tips.